So now the question is, are non-convertible unsecured debentures treated as deposits? Section 2, subsection 31 of Companies Act 2013. Let's start with the definition of deposits under Section 2, subsection 31 of Companies Act 2013. Deposit includes any receipt of money by way of deposit or loan or in any other form by a company, but does not include such categories of amount as may be prescribed in consultation with RBI. Now, to fully interpret this, we must look into the Company's Acceptance of Deposits Rules 2014, particularly Rule 2(1)(c), which lays out the list of the exclusions from the term deposits. Debentures, when they are not deposits. Debentures, when are they not treated as a deposits? According to Rule 2(1)(c)(9), any amount raised by a company through the issuance of debentures is not considered as a deposit if it falls under any of these three categories. So there are three categories if not considered as a deposit. One category is secured debentures. Second category is compulsory convertible debentures. Third category is non-convertible unsecured debentures, provided they are listed on recognized stock exchange. Secured debentures means these are backed by tangible assets of the company, not treated as a deposits irrespective of the convertibility or listing, because secured debentures. And compulsory convertible debentures, CCDs, must be converted into equity shares within 10 years. Also excluded from the definition of deposits. And non-convertible unsecured deposits, provided they are listed on a recognized stock exchange. This is a critical case. So, what if non-convertible unsecured debentures are not listed? Then where the compliance risk begins, unlisted non-convertible unsecured debentures is equal to deposits. If you issue unsecured debentures that are non-convertible and not listed on any recognized stock exchange, then yes, as per law, such instruments will be treated as deposits, because they do not qualify under any of three exceptions mentioned under Rule 2(1)(c)(9). Therefore, these raise the red flags under deposit rules and may attract penal provisions if issued without adhering to the deposit acceptance limits and procedures under Chapter 5 of Companies Act 2013. Exception is for intercorporate transactions. This is an important relief. If such non-convertible unlisted debentures are issued by one of the company to another company, so by one company to another company, even if it is unlisted, so they are not treated as deposits. This is because intercorporate loans and investments are specifically excluded from the definition of deposits, Rule 2(1)(c)(6). If company A issues unlisted non-convertible debentures to company B, this qualifies as an intercorporate arrangement, not fall outside the scope of deposits. No listing. So these intercorporate arrangements and falls outside the scope of the deposits. So no listing is required in this case. No deposit compliance provisions are triggered. However, make sure that this is properly documented and reported under MBP1 if directors are involved, and MGT7 and financial statements. So what are the risks for non-compliance? So risk of non-compliance, if a company accepts money through unlisted non-convertible debentures from non-corporate investors, say like HNIs or retail investors, that will be deemed as accepting deposits. And that too without approval if proper compliance is not followed. Violations can lead to heavy penalties under section 73 to 76A of the Companies Act 2013. Refund orders by NCUD and possible disqualification of directors. So the important practical pointers, always document the terms of debenture issuance clearly in board and shareholders resolutions. List your non-convertible debentures on recognized stock exchange if planning to raise from non-corporates. And also take care of intercorporate funding, intercorporate fundraising. File necessary forms like PAS3 and MGD14 wherever applicable. Reflect such transactions transparently in financial disclosures and auditor's notes. So the conclusion is, so can non-convertible unsecured debentures be treated as a deposits? Answer number 1, yes, if they are unlisted and issued to non-corporate entities. If they are unlisted and issued to non-corporate entities. No, answer is no if they are listed or if issued as a part of an intercorporate arrangement. Question is, can non-convertible debentures, non-convertible unsecured debentures be treated as a deposit? Answer is yes if they are unlisted and issued to non-corporate entities. And the answer is no if they are listed or if issued as part of the intercorporate arrangements. And please subscribe to our channels, RR Corporates, other channel RR Legal Talks. Hit the bell icon so that you will not miss any of the latest videos. Thank you.